Ladies and gentlemen, good day and welcome to the Muthoot Finance Q2 FY24 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in listen-only mode and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shweta Daftarzar from Elara Securities Private Limited. Thank you and over to you, ma'am.
Thank you, Lizanne. Good evening, everyone. On behalf of Elara Capital, we welcome you all to the earnings conference call of Muthoot Finance to discuss the Q2 FY24 performance. From the esteemed management team today, we have with us Mr. George Alexander Muthoot, Managing Director, Mr. Alexander George, Whole-Time Director, Mr. George M. Alexander, Whole-Time Director, Mr. George M. George, Whole-Time Director, Mr. George M. Jacob, Whole-Time Director, Mr. Yapan Alexander, Executive Director, Mr. K.R. Bijimon, Executive Director, Mr. Oomen K. Menon, Chief Financial Officer. Without much further ado, I now hand over the call to Mr. George Alexander Muthoot for his opening comments, post which we can open the floor for Q&A. Thank you and over to you, sir.
Thank you, Shweta. And this is Oomen, CFO of Muthoot Finance. Welcome everyone for the analyst call. First of all, let me apologize for the 30 minutes delay. So there was some delay in terms of filing and conclusion of the board meeting. So because of which we could start with a delay of 30 minutes. I apologize for the same. Anyway, we have a good attendance in spite of that. Thank you for the support. I now request MD sir to start the call.
Thank you. Good evening once again. Once again, apology for the delay. So we just had concluded our board meeting and the finance board meeting. The performance highlight for this half year ended September 31st, I would like to present before you. Our consolidated loan portfolio has shown an increase of 24% year on year and now stands at 79,493 crores. We have also highest ever gross gold loan advance in the first half of a year of 84,742 gross gold loan advances in the first half of this year. Also, gold loan advances to new customers is also on record high of 8,109 crores for this half year. This half year, our gold loan portfolio has grown by 5,642 crores and the increase in gold loan portfolio year on year stands at 11,016 crores. The consolidated profit after tax year on year stands at 2,100 for a half year stands at 2,140 crores and the standalone stands at 1,966 crores. Our interest collection has been all-time high in any half year at 5,447 crores. Coming to the subsidiaries, Belstar Microfinance has an increase in portfolio of 53% year on year and now stands at 7,874 crores. And the increase in loan disbursement is 76% year on year, stands at 4,294 crores, and the increase in profit after tax 284% year on year at 135 crores. Muthoot Home Finance, the increase in loan portfolio is 14% and stands at 1,616 crores, and the increase in the loan disbursement 164% at 278 crores. There is an increase in profit after tax at 9 crores. The insurance brokers have shown an increase in total revenue and stands at 47 crores, and the increase in profit after tax now stands at 25 crores for the half year. Asia Asset Finance, which is a three-legged subsidiary, there is an increase in profit after tax 31% quarter on quarter at Sri Lankan rupees 7.2 crores, increase in branch network. The branch network now stands at 80 branches. We opened 331 new branches by the group in the half year, raised 700 crores through the 32nd public issue of secured non-convertible debentures, which was oversubscribed on the first day of the issue. Muthoot Finance Limited, in terms of gold loan portfolio, registered a profit after tax of 1,966 crores for the half year, as against 1,669 crores in the previous half year. It's an increase of 18% year on year. The profit after tax for this quarter stood at 991 crores, as against 867 crores in Q2 of the last financial year. It shows an increase of 14% year on year. Loan assets stood at 69,000 crores in the half year, as compared to 57,230 crores in the last half year, registering a growth of 21% year on year. During this half year, gold loan assets increased by 5,642 crores, showing a growth of 9%. And during this quarter, the gold loan increased by 1,478 crores. The Belstar and Home Finance and Muthoot Insurance Brokers and Asia Asset Finance I have just discussed with you. I don't think there is anything more in that to discuss. At least we will wait for your clarifications and questions.
This is Uman again. We can download the investor presentation from the BSE site. I think it's already, I can see that it is there. And the NSE also, it is already uploaded.
Okay, I think that concludes my initial opening remarks. I now leave the floor open for questions and clarifications.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Yeah, good evening, sir. So this time on a sequential basis, the AUM growth is only 2% QOQ. So any comments on outlook for the next few quarters? And why it looks a bit subdued compared to banks who have grown their gold loans aggressively?
Yeah, this quarter the growth in gold loan was is 2%, which is 1,478 crores. That's not a bad growth. And the first half year, the total growth in the first half year is 9%. For the half year, 2 quarters together, it is 9%. And we had given a guidance of 15% to 20% for the full year. I think we stand by it, and we should be able to achieve the 15 to 20% by the year ending.
Okay, sir, but did you in the second quarter or so far in the third quarter, how do you see competitive intensity from banks? Is it remain more or less similar to the last 2 quarters, or has it increased?
No, I don't think there is any increase in competitive intensity. In fact, as I said last time also, some of the competitive intensity or the, what should I say, the bank's appetite and enthusiasm for gold is not as much as there as we have seen last year.
Okay, sir. Sir, and my last question is on margins. So what would your outlook be? Because margins have declined sequentially in the second quarter. So where do you see the cost of funds and yields both settle? And what explains the kind of pressure on yields this quarter?
See, our yield in last year, same quarter was, or our interest spread was 9.4%. In the quarter 4, it was 10%, 10.4. In quarter 1, it is 9.67, and now it is 9.19. So we expect to maintain the yield around this level. 9% level is what we should be able to maintain. That's the interest spread. So there is no pressure on yields, etc. But then as the book grows, definitely the yields the spread cannot go up substantially. But we'll be able to maintain this 9 to 10% yield spread going forward also.
Adding to what MD sir has mentioned, you might be knowing that our policy is to de-recognize the interest accrual once an account becomes an NPA. So there has been an increase in the NPA. Of course, we had sold a certain portion of the portfolio to ARCs, but whatever new NPAs have happened, to that extent, the interest reversals have happened. So this has this is also a reason why the yields is slightly lower. Otherwise, probably it would have been more closer to the numbers which we had seen in first quarter.
Okay, thank you.
Thank you. The next question is from the line of Nischint Chawathe from Kotak Institutional Equities. Please go ahead.
Hi, thanks for taking my question. Just curious, on this ARC sale, how much would you have sold, and what would be the financial implication of this transaction?
The amount sold. The amount of loans sold to the ARC is 700 crores. The main reason for this is Muthoot has always maintained a customer-friendly policy with regard to its gold loan customers. So when technically a loan becomes an NPA, maybe 90 days after the due date, it becomes an NPA in our books, and we have to maintain the NPA rate also. So we have to either auction the gold, or the customer is not coming and he is requesting for more time. We are unable to give him that time, because if we give him the time, the NPA will go up. So in order to reduce the NPA to manageable or reasonable level, we sold the portfolio to the ARC. But in this case also, the customer's gold is not auctioned. He gets definitely better time to release some more time to release the gold. Otherwise, the option would have been to auction the gold. So as I said earlier, our stated policy is that we will be a more customer-friendly company and try to retain the gold as far as we have come to retain it in the ARC's books. Now, although we had given to the ARC 700 crores, as of date, of the 700 crores, more than 250 crores have already been is released. About 250 to 300 is already released as we speak. That's in the last 1 month, 1.5 months, this much has already gone. So we were able to support so many customers. But definitely, we feel that it is a big thing, a big support we did to the customer. And all the transactions were done within the regulations, and we are well within the regulations in that. So finally, when we look at it, we have been able to help our customers. We have been able to help our customers by not auctioning their gold. I'm sure in the next few months, most of the 90% or 95 or 100% of these loans, the customers will take back. And then when we look at what we have benefited from it, we have benefited from 80,000 customers whose gold we were not able to, we did not have to auction. That is the reason for that. And then that has been very much appreciated by our customers.
So the transaction was executed perfectly in line with the RBI regulation. So it falls within the boundaries of the RBI regulation. For us, it was an innovative structure, and probably for the first time we have done this transaction. So for us also, it was a learning experience. Certainly, the most important thing is supporting the customers, and the other benefit is we could manage the NPS at the same level. Of course, our NPS doesn't translate to a loss, but sometimes we have to provide comfort to some of the people who raises too many questions on NPA numbers. So that is the reason why we have done this transaction.
Finally, we were able to help 88,000 customers.
People are already benefited. They have released the loan and redeemed the loan.
Okay. I hope the procedure is clear.
No. So this I think helps actually to understand why you did this. But just a very simple point I think I'm asking is what is the financial implication? I mean, is it kind of leading to some X crores of interest reversal? Because you mentioned that somewhere the yield got subdued. Out of the 700 crores, how much SRs do you have? Are they included in the loans under management? I think just basic accounting, which sort of helps us understand the financial implication of the transaction.
Okay, so the interest reversal has happened not because we have done an ARC transaction. Interest reversal happens the moment the loan account becomes an NPA. That is, we give the loan for a period of 12 months. 3 months from 12 months, that is after 15 months. Anyway, the account gets classified as an NPA. So ARC transactions is done for transfer of NPA assets, not the good accounts. So since it's already reversed, that reversal in any case would have happened. Then the transaction value has happened at par, because it's the first time we were also not, everybody, all parties have to be comfortable with the transaction. And there is a certain returns which go to the ARC, but that is only expense we incur because it was a 85-15% transaction. 15% is contributed by ARC. So to that extent, the ARC gets the benefit. That is the only extra cost. But of course, for us it's a very negligible amount. We will get our yield as if it was there in our books.
So for the 600 odd crores, and I think 100 crores would be, I guess, the ARC, and I guess you have you would have the SRs of around 600 odd crores. So that is something which is sitting in the loans and sitting in the gold loan book, or is it outside the gold loan book?
So it is under the investment, because SRs we have shown as an investment, not under the loan, not under the loan book.
So very, very, very technically, if I add that back, maybe your loan growth would have been maybe slightly higher.
You're right.
Yeah. So if we so the 1,478 crores of gold loan growth is after excluding the ARC sale. So if we gross it up, then probably the it is 2,100 odd crores.
Yeah, you're right.
But I'm not sure whether it is the.
You are not doing it in the account.
Sure. Got it. This helps. Just one final question is, Omen, if you could give some outlook in terms of where the borrowing cost will be goes and settle.
Sorry?
Borrowing cost.
So borrowing cost, I think we are having around the cost is around 8.46%. Most of the banks, the NCLRs are around 8.55, 8.6% level. I think we will move towards 8.6. After that, I don't think there will not be much increase unless the banks also raises the interest rate.
Perfect. This answers all my questions. Thank you very much and all the best.
Thanks, sir.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hi. Thanks for taking my question and congrats on the quarter. Just a clarification on the previous question. This ARC sale happened in October, right?
No, September end.
September last.
September 27th, I think.
Okay. And so, but our NPIs have still not gone down by 700 crores. It's down by only about 100 odd crores. So it basically means that there was a further slippage of 600 crores during the quarter.
Yes, correct.
But I think none of these are loan loss assets. Everywhere, actually, we are in the money.
No, which is fair, And just wanted to understand, so that 250, 300 crores which has been recovered, how has that been recovered finally?
The customers come and release the gold.
So the customers, see, that is the entire purpose of doing the ARC sale, right? So if you wanted to reduce the NPA, we should have done the auctions before September 30th. Then it would have been a destructive process for the customers. Because of the gold price, we are always in the money. And if we sell the jewelry, customer is going to lose the ornament, and of course we'll give them the surplus. But for him, it is a loss of his personal ornament. So, of course, he makes a request also to not to auction it because of the collateral value.
So all these customers, 250 crore customers, or about 20,000 customers, have come and taken back the gold, and they are so happy that they got back the gold.
No, I'm just
the principal and interest.
So the gold stays with you in your vaults.
We keep it in the safe custody with us.
Collection does not go to the ARC. Okay, so you're acting as a servicing agent for the ARC in such a case.
That's the correct technical word.
Okay, so then just going back to the fundamental question, the customer, when he was NPA, was not paying you back. And then what changed that he suddenly started coming to pay you back? Just that you've told him that now we've sold your loan to an ARC, so he comes and pays you back?
No, sir. In the last year, after 12 months, every month, so many customers come and pay. These customers also would have paid in 16 months, 17 months, even otherwise without doing anything. So you would have come and paid in 16 months. If it is not an NPA, you would have paid in the 16th and 17th months. Only that has happened now. Nothing else has happened.
One case, suppose the customer was expecting the cash inflow to come in the 16th month, and had we auctioned at the end of 15th month, he would have lost the ornament. So we gave him some extra 1 month time. He could come and take back the ornament after repaying the dues. So that is a benefit which we have passed on to the customers.
Not that we have frightened them saying that you have gone into ARC, etc. No. So otherwise, in normal course, you would have taken it in the 16th and 17th month. That is what has happened.
One of the USP with Muthoot is always that you talk to customers that the gold will not get easily auctioned. That's the news.
We give the maximum time.
We give the maximum time.
That is why customer perception about Muthoot is that we are a very customer-friendly company as regards retaining his gold with us without auctioning it very fast. That's it.
Compared to other players, the complaints are very low because the auctions are less, that is the one complaint normally in a gold loan company. My gold is auctioned off early without asking me, or I have asked you sometime, you didn't get it. That's the major reason for complaint. And these customers, this is the right example, 80,000 customers, already 24,000 customers have taken back the gold. If we had auctioned off, they would have all ended up with a complaint, or they would have a hurt feeling.
Okay. No, sir, that I totally agree that it's a customer-friendly organization. But and this is slightly digressing, but now how does the ARC then make profit if it is paying you the full value, the book value of the loan?
They put 15%. On 15%, they get a higher yield, which is actually the cost for us.
Okay. So they're okay. Fair enough. Okay, that answers my question. Thank you and all the very best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah. So sorry, once again to touch upon in terms of the write-off, given that stage 3 is still more than 4%, was this more kind of a one-off, or we will continue to resort to write-off in the coming quarter, sale to ARC in the coming quarters as well?
We can do auctions also. We can maybe persuade customers to come and take it back also. If it is required, we'll do whatever is necessary in that.
Okay. So if there is a demand, maybe given 4% stage 3, we may continue with sale to ARCs.
No, it is something, a decision which we need to take later. As we go forward, we'll have to take the decision.
Okay. And this entire stage 2 movement which is there, maybe almost from 1,400 to 700 odd crores, is what was there a forward flow into stage 3 because there was increase of 600 odd crores in stage 3. So were there hardly any upgrades coming through in the stage 2 accounts?
This quarter,
What is this? Upgrade and downgrade, sir. What is that?
No, I'm saying last quarter stage 2 was 1,400 crores. Now it is down to 700 crores. But it seems larger part of it has flown into stage 3. Okay, because even after selling to ARC, stage 3 is down only by 100 odd crores. So 600 odd crores would have moved from stage 2. So then this stage 2 is not actually getting upgraded to stage 1, but it is more slipping into stage 3. Would that be a fair assumption?
Okay. See, Kunal, two things I just want to know. See, because there are so many questions around this stage 3, even after repeatedly we are saying that no, our stage 3 doesn't translate loss. Too many questions, everybody raises concern. Sometimes we are also worried that why the analyst community is asking too much questions on gold loan NPAs, even though we don't incur a loss. So that is also one of the reasons why we have done this ARC transaction. Now, specifically, you are asking why there is no upgrade. Because our loans are all bullet repayment loans. There is no question of upgrade.
Okay.
It's not an EMI product, right? So we give the loan for 12 months. After 12 months, he is required to repay the loan. Now, even if
it gets repaid, okay. So either gets repaid or you may sell or maybe it will get recognized, yeah.
So the only option is for him is to repay the principal and interest. There is no option of upgrade because it's not an EMI product.
Okay. And one last question in terms of loans, this gold pledged, okay, so that will still exclude the sale to ARC amount because you said like it still continues with you. So gold pledge number will not have this sale to ARC, or it will still continue to have that sale to ARC. In tons, what we reflect as a gold pledge number, that will not have the sale to ARC number, no?
Correct. So the loan outstanding which we have shown in our presentation and the balance sheet doesn't include the ARC amount of 700 crores. It also doesn't. The tonnage also does not include this.
Okay. Perfect. Yeah. Okay. So 183 tons doesn't include this ARC sale. Okay. Cool. Yeah. Thank you.
Thank you. The next question is on the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, good evening, sir. Sir, I think you've answered this question a couple of times that, this ARC sale was done to kind of manage the NPAs and the fact that, you are not at a loss even if there are NPAs. Just wanted to understand, so why are these slippages happening? Why is it that customers and so many customers not kind of able to repay their gold loan at the end of 12 months, not able to pay them at the end of 15 months, and subsequent to that, they become an NPA? What is the underlying stress out there which is not allowing customers to kind of repay their principal and interest and take their gold jewelry back?
Hello. This is actually, gold loans are actually a bullet repayment loan. They take a loan thinking that they can get some money in 1 month, 2 months, 3 months. The money, 95%, 96% of the customers take back the gold before 12 months. Only 2-3% of them go beyond 1 year. This is nothing new. This has been happening for decades. This is what happens in decades. Now, the question is whether we need to be harsh on these customers and auction the gold. Why stress is happening? It is because they are in financial difficulty that they've taken a gold loan. And they've taken, this is not an EMI loan. So he's waiting for full repayment together, bullet loan. So as and when they get the money back, they'll repay. So there's nothing new that today there is some stress is happening. It's a market practice. So if finally he's not able to take it at all, then it will get auctioned. That's all. So there is nothing new this time or any time. Yeah, they have always a cash flow issue. So when the cash flow issue is better, they'll take it back. When the cash flow issue is being extended, etc., different customers, they may not be able to take back in the time of 7 months or 10 months or 12 months. It may go to 13, 14, 15, 16, 17 months. That's what happens. There's nothing new here.
Got it.
No new.
So essentially the cash flow issue that the customers have is much more pronounced today vis-a-vis what they used to be past, because if you just look at the NPA numbers, I mean, they are elevated versus what they used to be in the past.
So many different customers, so many small 50,000 loan, 20,000 loan customers. So nobody has.
We have around 84 lakh loan accounts, 55 lakh customers, We don't assess the cash flows of the borrower at the time of giving a loan. So probably a customer is coming and taking the loan for 3 months. Another customer might be coming and expecting a cash flow to come in 6 months. Another customer is expecting the cash flow to come in 11th month. Another customer might be expecting somewhere around 15 months, 16 months. We are offering a standard product of 12 months. Because we don't know the cash inflows. The customer is expecting that because this collateral is good, he'll be able to repay when the cash inflow comes. Now, at different points of time, we can be flexible to these customers by offering extra time. It is not a reflection of the stress of the borrower. It is more because we are not aware about when his cash flows are going to happen for repayment.
Got it, sir. And my final question is again on your yields and spreads. So first is a data keeping question. If you can just quantify the interest income reversal for this quarter and last quarter, so that you can calculate the yields excluding the interest income reversal. And so secondly, the second question again on spreads. So somewhere we kind of acknowledge that banks' enthusiasm for gold loans is not as high as last year, and maybe an inference of this is maybe the competitive intensity is also not as high as last year. But at the same time, somewhere, sir, our yields or our spreads are moderating. This quarter, spreads of almost 9.2%, and where we earlier used to be spreads of 10%. Somewhere I think there's an acknowledgement that I'm seeing that spreads could now further decline to 9% as well.
So, of course, we generally don't give a guidance on the yield. Mostly we talk about return asset. We always give a guidance of around 4% return assets in the medium term, because we are able to generate a higher return assets in the short term, and we continue to focus on that. Because it's a short-term loan, because it's a large volume, small ticket size loans, we have to offer various schemes at different markets at different rates. So the yield sometimes can vary. Customers are also becoming more knowledgeable about the interest rates, so they also expect a better deal from us. We being the largest player, we always try to offer a better deal to the customers. So we focus more on retaining the customers, because of which deals are supposed to come gradually over a period of time. Though in the short term we have continued to generate a higher return assets. I think this quarter it's around 5.8%, 5 point something return asset. So in the current quarter also, I think it is more or less in line with the first quarter, except for the reversals that happen. We are asking also on the interest reversal. I think it should be somewhere around 100 odd crores interest. So I don't have the exact number. It should be around 100 odd crores reversals that happen. So that is the present thing. I think will be able to maintain the same levels of yield for some more time. So that's why we give a medium term ROA target of around 4%. Medium term could be, I think in maybe about 5 years. no, I think no, that is a minimum level we try to maintain. Of course, currently we have a higher ROA level.
Got it. And sir, what is 100 crores this quarter? What was the interest income reversal in the last quarter?
I don't have the exact numbers, but no, it should
no
be
problem.
around those levels.
Got it. No problem, sir. Thank you so much and wish you and your team the very best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to one per participant only. The next question is from the line of Raghav Garg from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Just wanted to harp on the same question again with respect to the decline in yield. So, one of our larger peers this quarter had seen stable to increasing yields on a quarter-on-quarter basis. We are given to understand that this is a product where one can exercise pricing power since it's an emergency loan. So in that context, I wanted to understand whatever you're doing to retain customers, probably offering him a lower rate. Is this more an outcome of the competitive intensity that we are seeing? Is that what it is? And then my follow-up question would be, where do you see yields going, from here on, at least for the next couple of quarters? That's all. Thank you.
So if you look at this first 6 months, the disbursements to new customers have been the highest, in any first half of Muthoot Finance history. So we are getting a good number of new customers. Our focus is always on increasing the AUM through new customer acquisition as well as win back of existing customer base who currently don't have a loan account. So that is our primary objective. Of course, yield comes secondary because we are currently generating a good return to our stakeholders. So the focus certainly is on increasing the AUM.
So anyway, to answer your question, our yield will not decline or change substantially. It will remain almost the same, maybe 10-15 basis points here and there. That's all. Nothing more.
Would you say there is some geographical color to the competitive intensity? Probably South is one where you're witnessing a much higher level of competition, say from regional banks or some of the other players which are smaller than you. Is that the case?
No.
Okay. And just last question. So your gross loans under management, 675 billion, that you've reported on page 32 of the presentation, that does not include the portfolio sale, right, of 700 crores?
Yeah, it does not include ARC sales.
Yeah.
Okay, sure. Thank you. That's all from my side. Thanks.
Thank you. The next question is on the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. The first one is around what is the quantum of interest reversal? The second is what prompted us to do this ARC sale? This is the first of its own kind. And any which ways we are negotiating with the customers to come and get their gold loans, gold collateral back, which we used to do any which ways using auctions. So why did we choose this path of ARC sale and not doing auctions? What was the thought behind that, and what is the quantum of interest reversals? Thanks.
I think you are not there in the earlier. We had explained all this in the earlier discussion. Earlier questions we actually fully answered why we did this, etc. It's available there. Anyway, we tell it quickly. During the ARC transaction, we are able to retain the gold of the customer who has requested not to auction, so that we were not able to auction it. We don't need to auction it. Auctioning means the customer loses the gold, his precious ornaments is lost. We are actually giving a very good customer friendly approach for which so many customers are appreciating us.
What is the quantum of interest reversal, sir?
Earlier I had given this reply. I think it should be around 100 crores. I don't have the exact numbers.
Sure. Thanks.
Thank you. The next question is from the line of Mona Ketan from Dollars Capital. Please go ahead.
Yeah, hi sir, good evening. So I had this question on the yield. So essentially, at a previous call you had indicated that with rise in cost of funds, you will eventually have higher yields as well, or rather you'll pass on some of the interest rate hikes to customers. So have we seen anything, and could you give some color to the extent of lending rate hikes, if anything?
So there was no substantial hike in the cost. So only when there's a substantial hike, we need to pass it on to customers. It's only a few basis points hike, which we thought we could absorb out our books.
Okay, so there is nothing in the pipeline in terms of rise in, because H1 we've seen about 45 basis rise in lending rates, cost of funds.
No, I think our CFO earlier explained also, we don't see a big spike in the lending rates going, and the borrowing cost going forward. It will be almost the same, maybe small 10-15 basis points. That's all.
Okay. So just in one of the previous questions, you mentioned that the decline in the lending yields that you had this quarter, it's not probably because of the interest reversals, because the NPA rise did not happen this quarter. So what is resulting in this yield decline for us? Is it the lower rates offered to customers to retain them?
These are all short-term loans we do for the loan period is usually 3 months. People take back the loan in 3 months, etc. New loans are given. Small interest variations happen. It's not that we are giving a 20-year loan, etc. to customers. It's a very short-term loan, and the loan period which actually the loan exists in our books sometimes is only 1 month, 2 months, because it is so short. Small variations in the interest will definitely affect the overall yield also. It's all small, very, very minor changes.
Sure. So your spread guidance now comes down to 9 to 10%. Did I hear that right?
90?
The guidance on spreads, does that come down to in the range of 9 to 10% versus over 10% earlier?
Yeah. It is always between 9 to 10 only. It is now on the lower side of 9 to 10. Sometimes it is on the higher side of 9 to 10.
All right, sir. Thank you.
Thank you. The next question is from the line of Dhruv Saraf from Manyavar Family Office. Please go ahead.
Hi, sir. Good evening. Just wanted some color on the run rate of disbursements. So for the last 3 quarters, what we've seen is in Q4 of FY23 and in Q1 of 24, the average disbursements per quarter was around 50,000 crores plus in the gold loan portfolio. And if I were to just back calculate, this quarter we're around 32,000 crores. So can you just shed some light as to what's happened and why is this run rate come down despite gold prices kind of not being stable and where they were?
So, if you look at last year, we had a lower growth because of various reasons. In the first quarter, we were focusing on migrating the teaser rate customers. We also had a little bit of options during the first quarter. Second quarter, we had some challenges because we saw a lot of unhealthy practices by banks, which were affecting our business opportunities. We don't want to elaborate on what banks were doing and currently doing. And the third quarter, we again started seeing growth. Because we lost almost 3 quarters, we went all out to the market in the fourth quarter. And we did an aggressive scaling up of the book. We did a lot of top-ups. In the first quarter also, we continued that momentum. This quarter also we did, and we could do about 1,000, close to 1,500 crores of growth, which is not a bad growth. And that is the growth path we have followed in probably in the last 18 months. So if you do top up, what happens is, it's actually like a rollover of the existing loan. So because of which the advances sometimes it will be higher.
Sure, sir. Sure. Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Ms. Shweta Daptardar for closing comments.
Thank you, Lizanne. On behalf of Elara Securities Limited, we thank the management of Muthoot Finance to provide us the opportunity to host the earnings call. Thank you, team. Thank you all.
Thank you, Shweta. Thank you, Shweta. Thank you, everyone. Thank you. Thank you all.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Elara Securities Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.